As I sit here analyzing the charts, the U.S. markets are currently closed for the Thanksgiving holiday, freezing the ticker cape on what has been one of the most explosive and volatile weeks for defense technology stocks in recent memory. Ondas Holdings, Inc., trading under the ticker symbol ONDS, closed the last trading session on Wednesday, November 26th, at exactly $8.24. This represents a decline of roughly 2.4% for the day, or about 20 cents in absolute terms. However, looking at that single red candlestick in isolation would be a massive mistake, because the intraday volatility was nothing short of electric. On Wednesday alone, the stock swung from a low of $7.69 to a high of $8.68, churning through a staggering volume of over 114 million shares. To put that into perspective, that volume is nearly 4 times its average daily turnover, signaling that institutional and retail eyes are fixated on this name. While the markets are paused right now for the holiday, the after-hours tape shows the stock ticking slightly higher, sitting around $8.35, as traders position themselves for what looks like a chaotic reopening on Friday. When most people look at a company like Ondas Holdings, the expectation is that they are looking at a small, somewhat obscure player in the industrial data sector, a company known for setting up private wireless networks for railroad companies. That is the legacy narrative, the boring, utility-focused expectation that has kept the stock under the radar for years. The reality, however, is drastically different and far more aggressive. Ondas has quietly, and now quite loudly, morphed into a formidable defense robotics holding company that is aggregating critical drone and counter-drone technologies at a pace that is frankly dizzying. The expectation is a slow-growth infrastructure play. The reality is a rapid-fire consolidation of the autonomous warfare sector. This disconnect between what the market thought Ondas was and what it has actually become is the primary engine driving this massive volatility. Investors who are still valuing this like a traditional telecom equipment provider are missing the forest for the trees, while those who see the system of systems strategy emerging are the ones driving that 100 million share volume. We need to really break down the price action we saw leading up to the holiday because it tells a story of aggressive accumulation masked by profit-taking. The stock is up roughly 45% in just the last 2 weeks. When you see a move like that, unmatched by the broader indices, it usually signals a fundamental repricing of the business. You might be watching this on your Fidelity mobile app or tracking the swings on a Robinhood stock trading dashboard, wondering if you missed the boat. The recent pullback to the $8.24 level on Wednesday is technically healthy consolidation after a vertical move. It is the kind of cooling-off period that often precedes the next leg up, provided the fundamental catalysts hold water. We saw the stock touch an intraday high of $8.68 testing resistance before day traders likely took profits ahead of the market closure. This is classic behavior you see in high-velocity names, similar to how traders handle Nvidia stock during its most volatile earning weeks, or even Tesla stock when Elon Musk makes headlines. The difference here is the market cap and the sheer speed of news flow. The volume is the real tell here. Over 114 million shares changed hands in a single session. This isn't just retail traders on SoFi Active Investing chasing a momentum candle. This level of turnover suggests that larger funds are rotating in and out, trying to find a price equilibrium for a company that fundamentally changed its outlook in the span of 10 days. If you utilize Interactive Brokers trading platforms, you likely saw the depth of market flashing wild bid-ask spreads, indicative of a stock that is in the middle of a price discovery mode. This brings us to the core of why this is happening. The market is reacting to a flurry of acquisitions that theoretically position Ondas as a mini-prime contractor for the age of drone warfare. On November 26th, just before the holiday, Ondas announced an $80 million deal to acquire Roboteam. This is not just a random purchase. Roboteam makes tactical ground robots, unmanned ground vehicles, or UGVs, that are already sold in over 30 countries. This acquisition alone is projected to add over $30 million in revenue in 2026. This is where the online investing crowd often gets tripped up. They see a headline and buy the ticker without understanding the integration risk. However, the bull case here is that Ondas is building a portfolio that covers every domain. They have the aerial drones through their previous acquisitions. They have the counter-drone tech through the recently closed Centrix deal. And now they have the ground robotics through Roboteam. It's a holistic approach, without using that word. It's a complete ecosystem. The market loves a good ecosystem play. Just look at Apple stock and its walled garden. Ondas is attempting to build the walled garden of autonomous defense. The skepticism or the expectation part of our tension loop is that integrating these disparate companies is incredibly difficult. The reality that bulls are betting on is that the demand for these systems is so high right now due to geopolitical conflicts that execution perfection matters less than availability and capability. Let's look at the financials that are backing this up, because a script without numbers is just opinion. In their third quarter earnings report released earlier this month, Ondas reported revenue of $10.1 million. Now, to a novice using Schwab Intelligent Portfolios, $10 million might sound like peanuts, but context is everything. That figure represents a six-fold increase year over year. You do not see 600% growth in mature industries. This confirms that their pivot to defense and autonomous systems is gaining traction. Perhaps even more importantly, they raised their full-year 2025 revenue guidance to at least $36 million and set a preliminary target for 2026 of $110 million. This is the hook. If they hit $110 million in revenue, the current valuation looks very different. The market is currently trying to do the math. Is this a $3 billion company? The market cap has ballooned recently, hovering around the $3 billion mark according to some data sources, largely driven by this recent surge. That's a rich valuation for $100 million in future revenue, which implies a massive premium is being placed on their potential to dominate the sector. The sector momentum cannot be ignored. We are living in a time where investment strategies are shifting rapidly towards defense technology. The war in Ukraine and conflicts in the Middle East have demonstrated that large, expensive platforms are vulnerable to cheap, swarming drones. Ondas is positioning itself exactly in this niche. They're not building the aircraft carriers, they're building the swarms and the systems that stop the swarms. This is why you're seeing chatter about this stock on every investing sites and Fidelity Investments community board. The Centrix acquisition, which closed recently, gives them cyber counter-UAS capabilities. This means they can take over hostile drones electronically. Combine that with their Iron Drone product, which physically intercepts drones, and you have a layered defense. This is the kind of nuance that SoFi robo-advisor algorithms might miss, but individual brokerage account holders who do their homework can spot. I want to pause here and ask you a question because this is critical to the thesis. Comment below with your thoughts. Do you think the government will prioritize soft-kill cyber solutions like Centrix or hard-kill kinetic interceptors like Iron Drone in the coming years? I want to hear what you think because your tax dollars are paying for it. Now, let's look at the institutional side. While Robinhood Investments represent the retail army, we are seeing analysts from firms like Lake Street and Oppenheimer raising their price targets. Oppenheimer recently slapped a $12 target on the stock, while Lake Street went to $10. When you have analysts chasing the price upward, it creates a self-fulfilling prophecy of momentum. However, you must be careful. Self-investing requires discipline. The stock is trading above its 50-day and 200-day moving averages by a wide margin. In technical analysis terms, it is extended. The RSI on the daily chart has been scorching hot. If you are using the Fidelity trading platform or the Interactive Brokers platform, you can see the divergence forming. This suggests that while the long-term story is incredibly bullish, the short-term action could remain violent. We also need to discuss the boring side of the business, Ondas Networks. This is the division that deals with private radio networks for critical infrastructure, primarily rail. While everyone is excited about the killer robots, the rail business provides the sticky, recurring revenue that keeps the lights on. They recently secured orders related to the DOT 16 frequency band. This is critical because as trains become more automated, they need massive amounts of reliable bandwidth. Ondas provides that. It's not as sexy as a drone dogfight, but it's the backbone of their cash flow. Think of it as the AWS of the railroad world, essential, unseen, and highly profitable at scale. This dual-engine growth, stable rail infrastructure, plus explosive defense robotics is what makes the stock unique. Most defense stocks are pure plays. Ondas is a hybrid. Let's address the risks because a Fidelity Wealth Management advisor would certainly point them out. Dilution is the enemy of the shareholder. Ondas has been aggressive in raising capital to fund these acquisitions. They have raised hundreds of millions, and that means the share count has expanded. If you are holding shares in your Fidelity IRAs, you need to watch the share count closely. If they keep printing shares to buy companies, your slice of the pie gets smaller unless the growth rate outpaces the dilution. So far, the market is saying the growth is worth it, but this is a delicate balance. Furthermore, integration